Greetings, candidates, and welcome to the lesson. Greetings, candidates, and welcome to the lesson. The subject is financial accounting, and we are on the second topic, the accounting process and systems. In our previous sessions, we outlined the source documents such as receipts, invoices, delivery notes, and so on. We also learned how to prepare the books of prime entry, or the subsidiary books, or the day books. They are also known as day books, books of prime entry, books of original entry. They may also be known as journals. Then we did the ledger and the concept of double entry. So in our last session, we did the day books. That is the sales day book, the purchases day book, the sales returns day book, purchases returns day book, the cash book. Then there is the journal proper. Now the journal proper is another book of prime entry. Journal proper. Apart from the cash book, the sales day book, the purchases day book, the purchases returns day book, the sales returns day book, we also have another type of a journal known as the journal proper. Now the journal proper is also known as the general journal. The general journal, which is a crucial component of the accounting system. And it is essentially a book of original entry where various financial transactions are recorded in a chronological order. Now we use the journal proper to record those transactions that are not recorded in the other day books that we've learned about. So there are various functions of the journal proper. Do you understand? For example, the journal proper uses include one, recording the purchase and sale of fixed assets on credit. The journal proper is used to record sale and or purchase of fixed assets on credit. So when fixed assets are bought on credit, then they may be recorded in the journal proper. If the company sells fixed assets on credit, the record of such a transaction is made in the journal proper. You understand? The journal proper is also used to correct errors, correction of errors. And when we'll be studying the subtopic on correction of errors, we'll see how we use the journal proper in the correction of errors. Correction of errors. Correction of errors that may be identified in the other journals or ledgers. Such correction of errors is recorded in the journal proper or the general journal. Do you understand? So these are just examples of uses of the general journal. The general journal may also be used to record opening entries at the start of an accounting period. opening of entries at the beginning of the accounting period. The journal proper may be used to open entries at the start of an accounting period. Number 4, the fourth use of a general journal is writing off bad debts. When bad debts are written off, such a transaction has to be reflected in the general journal. And candidates, here is the format for the general journal format. The general journal has 2 columns for amounts. Then there is a column for particulars and the date. Date, details, debit, and credit. These are amounts. So when there is an entry to be recorded in the general journal, so there has to be a date, the details, debit entries, and credit entries. For example, if it is a bad debt that is to be written off, then there may be need to have a debit entry and a credit entry in the general journal. So that is the last book, candidates, for the journals. So there are 6 main types of journals: the sales journal, sales returns journal, purchases journal, purchases returns journal. We have the cash book and the journal proper. Are we clear on that?